Hello. Today we're going to talk about saving or paying yourself first. Before we get started, let's have a little review about the differences between a bank and a credit union. If you are able to save money, make sure you are being smart and putting it into an account where it will be safe and you will not be paying unnecessary fees. Credit unions are nonprofit financial organizations that are owned by the members and typically do not charge fees that many banks do. Credit unions are owned by the members and therefore their top priority is to serve the members. There are many different views on saving money. Let's look at just a few. Have you ever heard the expression that money burns a hole in your pocket? It does not literally burn a hole in your pocket, but it is human nature when you have money to think of how you can spend it. A good habit to start is to pay yourself first when you receive money. In other words, put part of your income into a savings account for later. The amount you save may be different than your friends or family. Many people use the general guideline of saving 5 to 10% of their take-home income. There is no magical number that everyone needs to have saved in case of an emergency. You never know what may happen to cause your income to reduce or even disappear altogether. So it is a good idea to have money saved in an emergency account. Not many could have predicted that our country would go into a quarantine over a virus, but it happened and caused many people to be out of work. Beauticians, non-essential retail workers, auto workers, and many who simply did not have any childcare options suddenly did not have income. Some of you may have personally or had family members who experienced this. The amount generally recommended for people to have in a savings account in case of an emergency is 3 to 6 months of living expenses. Don't make saving a chore. One way you can accomplish this is by making a game out of finding ways each month to spend less money. You could even challenge a friend to see who could spend less during an event or period of time. It may be as simple as ordering water instead of soda when you go to a restaurant, or looking for a coupon to buy that new game you have wanted to buy. Can you think of other ways you can spend less money? Let's talk briefly about setting savings goals. Wouldn't it be nice if we had a money tree or an unlimited savings account that had money we could go and get anytime we wanted something? Most people do not have this. To help prevent us from going into debt when there is an expense we know we are going to have is by setting a savings goal. What do I mean by a saving goal? When you know about a future expense, find out how much it is going to cost and how long you have to save for it, and you can figure out how much you need to save during that period of time. Or another way to look at it is by taking how much you are able to save each day, week, or month and find out how long will it be before you will have enough money for that expense. When you set your goals and know about future expenses, how do you determine how much you need to save each day, week, or month? Saving money takes time. Even short-term savings takes time. You can see in this first example, if you want to buy a pair of limited edition sneakers that are supposed to come out in 6 weeks and cost $80, you will divide the cost of the sneakers by the 6 weeks which you have to save for them to get how much you would need to save each week, which equals $13.33 per week. Similarly, if you have a class trip that you need to pay for in 5 months, or 20 weeks that cost $250, you will simply divide the cost of the trip by the amount of time you have to save for it to find that you will need to save $12.50 per week. Long-term savings goals can be intimidating, but when you break down large savings goals into smaller increments, it makes it more manageable and not so overwhelming. For example, if you are 15 and you want to buy a car when you graduate in 3 years, take how much you plan on spending on the car and divide it by the amount of time you have to save for it to find out how much you have to save each week or month. $12.82 per week is much more manageable than $2,000. Another example is an emergency fund. Say that you found that you typically spend $100 a month and wanted to build up an emergency fund in a year equaling 5 months of expenses, or $500. You would take the $500 and divide it by the 52 weeks that are in a year to find that you need to save $9.62 each week. This is not nearly as difficult as just putting the whole $500 into a savings account right away. Let's do a quick review of what we've learned. Take a minute and see if you know the answers to these questions. A nonprofit financial institution is a credit union. The owners of a credit union are its members. A general recommendation is to deposit 5 to 10% of your income into a savings account. It is a good idea to have money in an account in case of an emergency. Many financial advisors recommend that you have 3 to 6 months of expenses saved up to cover emergency situations. If you wanted to buy AirPods that cost $140 and you were able to save $10 per week, it would take you 14 weeks to save the money for your purchase. Thank you for joining us at Sun Federal to learn a little bit about savings today.